Dave Johnston here with Day Trade the Markets. We've just been filled long at 52.71 for two contracts. We just had a dip down here to 61. So I'm going to place my stop at 58. So I've got a 13 tick risk on that. I'll just expand this out a little bit. So you can see here that today the market has had some follow through up. Here was yesterday's highs right here. Market open here in the regular trading hours today, took a bit of a dip and then has come up. So this kind of action here today, moving above yesterday's high, has also closed the gap from the previous day's low and stayed well above it. We had closed yesterday down here below it, so we moved up nicely above that. The next area of, see, what is our high here? Is it 83? So we have had resistance here in this area, right about at the 83, not just from today's high, but going back to yesterday where we had no, sorry, 2 days ago when we had that nice sell-off. So, there is some resistance in that area, and obviously we want to keep monitoring it fairly closely. So I'm going to go ahead. I'm just going to draw a line across there because that was not just today's high, but it was also a reference area from a couple of days ago, a fairly significant one. So I'm just going to do that, and so that's at 83. So let's see. And then we've got another one probably around 20 ticks higher. So 84. I'll put this at 04, somewhere around here is our next objective. So I'm going to go ahead and put in an order to sell one of these contracts up here. I need to change that back down to 1. So I'm going to place that sell limit a little bit below that next objective, so at 98. And we're long, what are we long from 71? I might bring it down a bit, but we'll see how that goes. I'll just go ahead and let me just stretch this a little bit here so we can perhaps see this a little bit better. Today's action. There we go. We've got our stop in place, our first objective. First objective might be a little too much. Let me see. This goes from roughly 83 to 04. So that's about 20 ticks. So let's put it around 9 or 10 above that, which would take it to, let's say, 91. Yeah, let's put it at 91. We're long from 71. So that's a first objective. I think that's a fair objective on that one. So we're set up there. We've got our order in for 2. We've got our sell stop in for 2. And we have our sell limit in for 1. So just going to leave it like that for the time being. I'm going to go ahead and pause the recording, and I'll pick it up as the market dictates. Okay, just restarted the recording. The market just popped up and filled us at 92, as you can see here. Just hit right on the dot there, and sorry, 91, and got us filled. So I'm going to go ahead and adjust this stop here now to break even. Let's see, break even. Well, 71 we're break even. It's hit 91. I think I'll raise it just a little bit more. Let's raise it just below that last dip at 74. So put it at 75. So our stop for the second contract is now here at 73. Long from 71. So next objective is this next line, as I was saying, which is the next higher resistance area at 53.04. So, okay, the market had just formed this green bar. Now that's the lightest or least aggressive of our 3 aggression bars in Day Trade the Market software. So I'm going to go ahead and the low of that bar, let's see, is at 80. So I'm going to just increase this stop. Oh, I need to change the number here to 1. We only have 1 contract left. The low of that is at 80. I'm going to raise it right up here to 77. Okay, maybe just stretch this out a little bit so we can see it perhaps a bit better. Here we go. And I'll move this marker here along with that up to 77. So locked in 6 on the second contract, made 71 to 91. Yeah, so 20 ticks on the first. So We had some pretty good volatility here after we had entered. This market, it sprung up here very quickly after we entered, all the way up to 87, then came back down and tested this low. And of course, we had our stop just below there, so it kept us in the trade, and it was turned right around and filled us here. So this is our next objective up here. I'm just going to use a trailing stop for now on the second contract of these two that we've traded on the long side in the crude. So we'll just leave it like that for now. I've got everything in place, and I'll pause the recording and pick it up as the market dictates. Okay, just resuming the recording. We did get a bit of a dip back down towards the low of this green. Did not take it out, so it kept us in the trade. We've now got another green here, and the low of this green is at 52.93 right here. So I'm going to raise the stop to 52.90. Okay, so locked in, we're long from 71, so that'll lock us in at 19 ticks on the second one. You can see we're getting fairly close here to the next objective, but we'll just keep using a trailing stop on the second contract. So that's it for right now. That's what I wanted to bring you up to date on. Once again, I'll go ahead and pause the recording. Okay, just restarted the recording. You can see it dipped pretty quickly here, got that decel bar up near that second objective, and then came off fairly quickly and did stop us out at 90. So just 19 ticks on the second contract, got 20 ticks on the first, so what's that, a total of 39 ticks on that. So there's a trade in the crude oil futures market utilizing the, that's the Feb 2017 contract. Today is Thursday, December the 16th, 2016. I'm Dave Johnston with Day Trade the Markets. So if you do have any questions or comments for us, please send them over to us at info@daytradethemarkets. I hope you enjoyed this recording of a live trade and how you can utilize the aggression in the market to really pinpoint some good entries and also for the management of your trade. So that'll be it for today. Thanks for watching. We'll see you next time.